Hi, everybody. Thanks for joining us today. We could say that we are very excited to cover this topic today, but we are not humans. We just help the CYTO team to automatically analyze data. Don't worry, they treat us right.
Indeed. And today, we're taking a deep dive into Angola's National Financial Inclusion Strategy, the ENIF, looking specifically at the plan for 2025 to 2027.
That's right. And our main source for this exploration is a really interesting proposal put together by CYTO, so an Angolan Fintech company.
Yeah, and it's important to remember, while they did consult with external specialists, the views and analysis we're discussing today are fundamentally CYTO's perspective.
Good point. And the ambition outlined in this proposal is pretty significant, isn't it?
It really is. The goal is to position Angola as a leader, a real frontrunner, in inclusive finance across Africa.
So to understand how CYTO thinks Angola can get there, we'll be looking at their analysis of the current situation in Angola and also drawing lessons from some key case studies. They looked at countries like Ghana, Malaysia, and Argentina, which have made real progress.
Exactly.
Yeah.
So our mission today really is to get a handle on the core challenges Angola faces in bringing more people into the formal financial system.
And of course, to explore the solutions CYTO is putting on the table.
Precisely.
Okay, so let's start by unpacking the Angolan context. CYTO points immediately to this huge demographic potential.
Yeah, the demographic dividend, they call it. Africa's population is incredibly young and growing fast, and Angola is a prime example. The median age is something like 16.6 years.
Wow, that's young.
Incredibly young. And by 2050, a huge chunk of the world's children will be African.
But this youth bulge brings challenges too, right? CYTO highlights the urgency around job creation.
Absolutely critical. They estimate Angola needs to create somewhere between 1 and 1.2 million jobs every year just to keep pace.
That's a staggering number.
It is. And the link to financial inclusion is clear. Without access to financial tools, it's much harder to channel that youthful energy into economic growth. There's a risk of instability if unemployment remains high.
So where does Angola actually stand right now? What's the picture on financial inclusion?
Well, CYTO's data points to around 50% of adults having a financial account back in 2020.
Okay, 50%. That's definitely an increase from, say, 2014.
Oh, a big jump, yeah.
Yeah.
But it still lags behind the global average, which is up around 76%.
Right, and also behind some regional peers.
Exactly. Ghana is around 68%. Kenya's pushing nearly 80%, so there's still quite a gap to close.
And is that 50% figure evenly spread?
That's the key issue.
Yeah.
CYTO flags it's not. Progress has been very uneven. Traditional banking tends to focus on urban areas, on formally employed people.
Leaving many behind.
Yes. Millions remain unbanked, particularly women, people in rural communities, and those working in the informal sector.
And what about mobile money? You see it taking off elsewhere in Africa.
Interestingly, CYTO notes it's still quite nascent in Angola. This is despite pretty strong mobile phone penetration. It hasn't quite clicked yet on a large scale.
Okay, so there are challenges, but CYTO also identifies some real strengths Angola can leverage, doesn't it?
Definitely. Things like political stability, which is crucial. There's also a stated government focus now on financial inclusion.
Plus declining inflation, which helps.
Right. And of course, the oil wealth, if managed effectively. Strategic location, the Portuguese language connections, a growing urban middle class.
And an emerging fintech scene, which CYTO is obviously part of.
Exactly. So there are building blocks.
But despite these strengths, what are the main hurdles CYTO points to? The persistent gaps.
Well, financial literacy is a big one, estimated at only around 50%.
So half the adult population potentially doesn't understand basic financial concepts.
Pretty much. Then there are significant gender gaps in who actually owns an account. The cost of financial services can be too high for many.
And access outside the main cities is still limited.
Very much so. And finally, the potential of the Angolan diaspora remittances, investment that hasn't been fully tapped into yet.
Okay, that gives us a good sense of the situation in Angola. Now let's pivot to those case studies CYTO analyzed. Ghana first.
Yep, Ghana. CYTO sees it as a relevant comparison, similar demographics in some ways, similar economic structure to Angola.
And they've made big strides, haven't they?
Remarkable progress, actually, driven largely by mobile money. By 2021, 60% of adults had a mobile money account. That's huge.
60%. How did they achieve that?
CYTO points to a few key things. A national financial inclusion strategy with specific targets for underserved groups. Crucially, they created an enabling environment for mobile money, things like branchless banking guidelines. Tiered KYC.
Tiered KYC. What does that mean exactly?
It means knowing your customer. Requirements were adjusted based on risk. Simpler requirements for lower value accounts, making it easier for people to get started. They also leverage their biometric national ID, the Ghana card, for verification.
So what are the main takeaways for Angola from Ghana's experience, according to CYTO?
The big one is really leverage mobile money. Don't let that opportunity slip. Develop a national strategy with clear targets, especially for women and rural areas.
And the literacy point.
Absolutely. Financial literacy campaigns, crucially, in local languages. And underpinning it all, strengthening digital ID systems. That tiered KYC approach is also a really valuable lesson.
Okay, Ghana provides some clear pointers. Next up, Malaysia, different context, right? Upper middle income, highly urbanized.
Totally different context. And Malaysia has achieved near universal access to basic financial services, 88% account ownership in 2021. Their focus has actually shifted now to quality and usage, not just access.
88%. So how did they get there?
CYTO highlights their national financial inclusion frameworks. A big piece was agent banking.
Right, using local shops or individuals as banking agents.
Exactly. They achieved access points in over 99% of sub-districts through this. They also introduced basic bank accounts with low or zero fees.
Making it affordable.
And accessible. Plus a big push on financial literacy with a national strategy. And importantly, Malaysia really embraced fintech regulatory sandboxes, digital banking licenses, and they have a universal digital ID, the MyCAD.
So, lessons for Angola from Malaysia. What does CYTO suggest?
Replicating that agent banking model, especially for rural Angola, seems like a strong recommendation. Offering those simple, no-frills basic accounts is another key takeaway.
And fostering the digital side.
Yes, promoting the whole digital finance ecosystem, a coordinated financial literacy approach, and forward-looking regulation, including things like eKYC, electronic customer verification. It's the breadth of Malaysia's approach that's quite striking.
Fascinating. Okay, the final case study, Argentina. Known for a dynamic fintech scene, but also macroeconomic volatility.
Yeah, that's the backdrop. Despite shocks, they saw significant growth in account ownership from about 33% 2011 to 68% in 2021.
What drove that growth?
CYTO points to a couple of things. Social programs like child benefits that actually required recipients to open bank accounts.
Ah, a direct
A
incentive.
very direct push factor. And alongside that, a really thriving fintech sector, names like Mercado Pago, Uala became huge. Digital payment adoption there is incredibly high, like 95%.
Wow, and their strategies.
They also had a national financial inclusion strategy. They focused on agent networks and, crucially, interoperability, making different systems talk to each other. They have a unified QR code standard called Transferencias 3.0.
So, easy digital payments.
Very easy. Plus, mandatory zero-fee basic accounts accessible online with a national ID. And they deliberately fostered fintech with a sort of sandbox economy approach.
Okay, so learnings for Angola from Argentina.
CYTO suggests exploring digitized social transfers using government payments to drive inclusion. Building an open QR code-based instant payment system is another big one.
Making payments seamless.
Exactly. Also, encouraging tech startups with things like rapid formation company statutes and maybe dedicated tech zones. And implementing a permissive but clear regulatory sandbox for fintech.
But there's a cautionary note, too.
Yes, CYTO rightly adds a reminder. None of this works well without macroeconomic stability and strong consumer trust. Argentina's experience highlights that.
Right, crucial context. Okay, so we've looked at Angola, we've looked at these international examples. Now let's get into the heart of CYTO's recommendations for Angola itself. What's the first big pillar?
It starts with setting a clear long-term vision and targets. CYTO suggests something ambitious, like declaring universal financial access by 2030.
A clear rallying cry.
Exactly. With a concrete target, like 80% adult account ownership by then, and maybe an interim target of 70% by 2027.
And not just overall numbers, right? Specific groups.
Critically, yes. Specific inclusion targets for women and for rural populations. And they also stress targets for usage, not just ownership, like doubling digital payment adoption by 2027.
Makes sense. You need people to actually use the accounts. How do they suggest tracking all this?
Through clear key performance indicators, KPIs, things like account ownership, active usage rates, savings levels, credit inclusion, insurance take-up, digital payment volumes.
And that financial literacy rate we talked about.
Absolutely. CYTO recommends tracking these via an annual scorecard, maybe starting from 2025. Public accountability.
Okay, vision and targets first. What's the second major recommendation area?
It's about taking those international best practices we just discussed from Ghana, Malaysia, Argentina, and really adapting them smartly to Angola's specific situation, not just copy-pasting.
Right. So for mobile money and agent banking.
Turbocharge them, essentially. CYTO suggests a target: 5 active agents per 1,000 adults by 2027. Simplify the rules for agents, incentivize private companies to expand into underserved areas.
And learn from Ghana on interoperability.
Definitely. Make sure the different systems can work together smoothly.
What about those simple bank accounts?
CYTO strongly recommends introducing no-frills accounts, low or zero fees, basic ID to open, and set targets for opening millions of these.
Focusing on accessibility.
Precisely. They also emphasize supporting digital financial services for small businesses, MSMEs, maybe through fintech challenges, partnerships for digital microloans, supply chain finance, drawing a bit from Kenya's M-Pesa experience there.
And the regulatory side of this adaptation.
Adopt innovative frameworks. Things like proportional KYC, like we discussed with Ghana, fintech sandboxes to allow testing, strong consumer protection laws, and CYTO also suggests Angola join the Alliance for Financial Inclusion, the AFI, to tap into global expertise.
Okay, adapting best practices is key. The third area CYTO focuses on is public-private partnerships, PPPs.
Yeah, this is seen as absolutely vital. They propose establishing a National Financial Inclusion Council.
Bringing everyone to the table.
Exactly. Co-chaired by government and private sector leaders, meeting regularly to steer the ENIF, ensure coordination.
And what about financial literacy under this PPP umbrella?
A comprehensive national financial literacy program, integrated into schools, using mass media, community training, and importantly, getting financial service providers involved in delivering it, aiming for a significant increase in the literacy rate by 2027.
That sounds crucial. Does entrepreneurship support fit in here too?
Yes. CYTO suggests things like youth startup challenge funds, providing business development services, maybe a credit guarantee scheme to de-risk lending to SMEs and startups.
Making it easier for new businesses to get funding.
Right. And tracking the impact new SMEs created, loan growth, job creation. They also mentioned PPP specifically for infrastructure, getting mobile networks and internet connectivity expanded, prioritizing those underserved areas, aiming for something like 90% mobile broadband coverage by 2027.
This discussion was brought to you by CYTO. We put your financial team on autopilot, saving time and money for businesses in Angola. If you like this content, don't forget to like and share. Thank you.
So moving on to the fourth recommendation pillar from CYTO, really harnessing digital infrastructure.
This feels central to everything, doesn't it?
It really does. CYTO stresses the need to speed up the rollout of a universal digital ID system, biometrics, digital verification capabilities.
Like the Ghana card or Malaysia's MyCard.
Exactly. Aiming high. 90% plus adult coverage, and maybe 100% digital verification for opening accounts by 2027. That would be transformative.
And beyond the ID itself.
Developing digital public goods. Things like a national interoperability platform, maybe a digital address system, which can be a huge barrier. They even float the idea of a tiered national digital ID-linked payments wallet.
Interesting. What about moving away from cash?
CYTO advocates for a push towards a cash-light economy. Mandating electronic government payments by 2027 could be a big step, incentivizing merchants to accept digital payments too.
But with all this digital activity comes risk. Right. Cybersecurity, consumer protection.
Absolutely critical. CYTO includes measures like fraud awareness campaigns, clear channels for consumer redress, regulating fees and lending practices fairly, and major investment in national cybersecurity capabilities. You can't build trust without that.
Makes sense. Okay, recommendation 5 focuses on the diaspora and international investors.
Yeah, tapping into that potential we mentioned earlier, CYTO suggests some creative ideas like issuing diaspora inclusion bonds, specifically to fund financial inclusion projects.
Using diaspora capital for development.
Exactly. Also, making it cheaper and easier to send money home, facilitating remittances by boosting competition, maybe allowing mobile money wallets to receive international transfers directly, aiming for average remittance costs below 5%.
That would make a real difference.
It would. They also suggest creating diaspora knowledge networks, promoting investment opportunities back home, particularly in fintech and banking, and actively seeking help, technical and financial, from partners like the World Bank, IMF, AFDB.
Maybe even a dedicated program.
They float a name, Kumba.
And
Invest in Angola. A clear invitation. And measuring success by investment flows and diasporal initiatives.
okay, we've covered the vision, the adaptation, the partnerships, the digital infra, the diaspora. What's the final piece CYTO emphasizes?
It's all about implementation, governance, monitoring, accountability. making it actually happen.
The nuts and bolts.
Pretty much. They recommend a dedicated coordination unit within government for the EF, developing phased yearly action plans with concrete deliverables, who does what by when.
Keeping momentum.
Right. Encouraging public commitments from banks, telcos, government agencies, incorporating community feedback through surveys, social media, making sure the necessary laws are passed to support the strategy.
And tracking progress publicly?
Yes, publishing that annual financial inclusion scorecard we talked about, tracking against international benchmarks, and crucially, building in flexibility to adapt as new technologies emerge. It's not a static plan.
Okay, wow, that's a really comprehensive set of recommendations from CYTO. So if we were to summarize the key takeaways from this deep dive.
I think the main thing is that Angola has this huge window of opportunity, right? Young population, advancing tech, a robust financial inclusion strategy, like the one CYTO outlines, could be incredibly powerful.
And CYTO's proposal gives a clear roadmap, drawing on those international lessons but tailoring them.
Exactly. It's not just theoretical. It provides concrete steps based on what's worked elsewhere and what fits Angola's context.
And the potential upside is massive.
Huge. We're talking significant economic growth, less inequality, real empowerment for women, better balance between regions.
Yeah.
Ultimately, a more resilient, diversified economy for Angola.
It really does sound like, as CYTO puts it, a call for a collective effort.
It has to be. Government, private sector, civil society, citizens. Everyone needs to be involved to achieve that goal of finanzas para todos, finance for all.
And I found that final point in the CYTO proposal really interesting, framing financial inclusion as just the beginning.
Yeah, positioning it as the launchpad, the essential foundation for what they see as the next strategic frontier for Angola, artificial intelligence inclusion.
Thinking steps ahead, it leaves you with something to ponder, doesn't it?
It certainly does. Financial inclusion as step one towards a much broader digital future.
This discussion was brought to you by CYTO. We put your financial team on autopilot, saving time and money for businesses in Angola. If you like this content, don't forget to like and share. Thank you.